Welcome to Brick by Brick. Join me, Loren Wernette, as I share my personal journey of building a thriving real estate and hard money lending business from the ground up. Along the way, we'll explore the strategies, challenges, and breakthroughs that come with growing wealth. Whether you're a seasoned investor or aspiring entrepreneur, or simply curious about the world of private lending and real estate, this podcast is packed with actionable insights, real-world stories, and mindset tips to help you build your own path to success, brick by brick. Welcome to another episode of Brick by Brick. I'm your host, Loren Wernette. Today we have a local guest that I have actually met in person at least once at a local TRIA meeting, Devin Solo. Devin is one of the owners of Better, a local real estate investing firm that not only does real estate as a realtor, but also focuses on build to rent and build to sell homes, specifically in the Durham market. And he has got a real expertise on flag lots and subdividing lots in inner city to get extra bang for your buck while doing those builds out. So Devin, thanks for joining today.
Thanks for having me.
So I gave a real high level overview of what you do. And, I probably know you a little bit better from a little bit of interaction I've had with you at some local TRIA meetings, but can you give us an idea of kind of how you got into, like, where you came from, how you got into real estate, and how your journey is kind of morphed into what you're doing today?
Yeah. So I bought my first property back in 2018, and I really got into it with a finance background and having a non-compete actually at the firm I was at, where I was allowed to do real estate and basically nothing else. And looking at real estate, one thing I quickly figured out is it was very similar to what I was doing with private equity style deals in my day job, where you're buying an asset, you're adding value, and then you're either refinancing or selling it off and going and doing it again. And, there are a lot of parallels to it. And so from there, I met a couple good partners, partnered up. We got into fixed to rent for ourselves. And we're doing a lot of fixed to rent in 2019, 2020, into 2021. At which point we really started seeing opportunities for new builds, starting to analyze the risk and start to realize that, hey, we should actually also provide this service to other investors. Other people are interested in that. We can grow a construction company, grow our brokerage, and people are looking for someone who provides that service, who has an investor lens rather than, hey, I'm just a builder. And we were able to provide that well. And since then, we can dive more into it later about why we've shifted to more new construction rather than the rehabs that we were originally doing, and why we think that's a better risk reward for, situation for investors.
Yeah. So you glossed over some of the probably more formative years, right, of your investing career. So let's take a big step back. What were you doing? Did you go into the private sector right out of college and get into real estate right away? Were you doing something else, or what drew you into real estate initially?
Yeah. So I originally was at a family office, basically doing private equity style deals, leveraged buyouts, where we were buying tech companies or finance companies, things of that nature. And so understanding how leverage can help you, and you're not just buying a business for $10 million, you're buying it with $3 million down and getting a loan for $7 million, which should sound pretty familiar to a lot of people who are in real estate, on how you can then figure out how to increase earnings, or however you increase the value in real estate, and then you can make a profit. And a lot of those financing components are difficult for people to understand. They're like, all I heard is that if I get a loan, one day a bank will take my property. And that's just not the case. It's also like leverage at an appropriate level, if you understand it, is very good and useful. And at my day job, being able to learn when is it useful and when is it problematic was extremely helpful in being able to analyze real estate, where we were, on paper, call it in 2020, I know we were buying houses at 95% loan to cost, where, okay, this project is $200,000 project, but I'm basically buying a house with $10,000. And so it sounds like really high leverage, because it was, but I knew at the end of the day, with the right plan, okay, well, it's worth $250 when it's done. So I'm going to be able to refinance and get all that capital back basically. And the market did some crazy things, a little bit of luck where you have like a 2-year period where everything's going up 25% a year. Like, okay, yeah, my build costs are going up 10% a year too, but like, who cares? Like, just over budget, whatever, it doesn't matter. When I refinance, I'm getting all my capital back and then some. And then interest rates doubled and that became impossible. It's time to just pivot, shift, be creative, and figure out ways to make things work, which we did. But yeah, I glossed over a little bit there too on some of it, but hopefully that
Sure.
answered your question.
It does. So I think, one of the things you touched on is, and I want to get your opinion on this, is the concept basically of the Burr method, right? Where you're buying the property and you're buying it at relatively high leverage in a lot of cases. You're adding value to it, and then you're refinancing it out. How do you, as someone that's got experience in finance and background, make sure that you are not being overly optimistic on what the value is going to be when you do that value add, so that you don't either get yourself in trouble when you go to refinance and can't refinance it, or basically leave too much money in it when you are done?
Yeah, that goes to just good underwriting from the start. Some of it's just like a lot of people get emotional and they're like, I really like this house. I really, really like it. And it's like, it doesn't matter what your opinion of that house is. It's a matter of the opinion of the market, not your opinion. And, a lot of people also are like, well, I know when I'm going to flip this house, if I can just find the one person who's going to pay me 500,000. And it's like, well, the comps say 450. So like, yeah, you might think you're going to get 500 and that's nice to think about. And or you have systems in place where you're like, I like to call it the rule of 3. I need to see something 3 times before I believe it's real. And if I don't see it 3 times, I need additional contingency or an additional contingency on my construction, or additional contingency on what returns I need to make on the project. And understanding that with more risk, you need more return. It's okay to do risky things. Just know you need to get paid more for it. Lenders do it that way too. There are lenders out there. I'll do something super risky. They'll do it, but they want 25% return. That's fair. Whereas other lenders like, well, if I go to the community bank, they're going to do a loan for 6%, and it's like, yeah, and they're going to be at 60% loan to value, and they're going to get a personal guarantee, and that's why that return is associated with that risk. And that, I also have some other basic rules like that I established early on when we were doing Burr back in 2020, which is like, I won't invest in a city that doesn't have a growing population and doesn't have at least 50,000 people. Those were 2 rules I would follow. So, I know back then a lot of people were doing Rocky Mount, and look, I missed out on Rocky Mount. I know there's a lot of people made a lot of money in Rocky Mount, North Carolina, but I just didn't touch it. I also can tell you I didn't lose any money in Rocky Mount, North Carolina, following those rules. If you end up in these more rural areas, there are fewer comps, more ways that things can go wrong. And so, again, not having emotion, if you set those rules and you say, these are my 10 rules for my buy box and how I do a deal, stick to the 10 rules. Like, there's a reason why you made them in the first place, and don't make exceptions.
Mm-hmm. Yeah, I can tell you stories about Rocky Mount for sure. As I have had properties up there. I currently still have one, and I can't say I left there without any bumps and bruises. But overall, not catastrophic, right? You learn a lot of things. There's some things that an appraisal or a good underwriting don't tell you, like, well, this property is going to have 3 turnovers in a year, right?
Yeah.
Or the HVAC is going to go out 10 months after you buy the damn thing.
Yeah. Yeah, you just need to really like see stuff in person a lot of times with real estate too. And people don't, especially like in Durham specifically. I talk to people who invest in more of these suburbs of like Raleigh and like Fuquay Varina, Dell, Zebulon, you name it. And like their entire appraisal is like, can look at the entire town of Fuquay Varina and be like, that's your comp set. And it's like,
Right.
no, in Durham, North Carolina, you can go a quarter mile, half a mile, and be 20% change in what your value is on the back end. And if you don't understand the neighborhoods and the change that quickly, you can get burnt pretty quickly just by hopping to the wrong side of the road sometime.
Yeah.
Yeah.
So I do want to get into Durham specifically, but let's jump back a little bit and talk
Yeah.
about, okay, so you've doing basically rentals and then some flipping, and then you basically built a brokerage, and you made a transition, and you said, we're not going to do basically flipping anymore. You're going to be doing build to rent, where you're building homes from the ground up and then holding them as rentals, or build to sell, which is new construction. So tell me about when that transition happened, why that transition happened, and how it's worked so far since you made it.
Yeah, so we were already experimenting a little bit with new build. We had started a couple projects that back in, I guess, around 2022 that were allowed more in Durham. Durham basically changed their code back around 2018 through something called expanding housing choices, and created some new product types. And we started, trying to utilize those. We were subdividing some lots up, things of that nature. And really, I got the opportunity to meet other people doing what I was doing. Durham's such a friendly market where, like, I can go talk to other builders, other developers, other brokers, and everybody's pretty nice to each other because there's so much opportunity here. And getting to talk to them and understanding, like, okay, not only is it easier to do this in Durham than like anywhere else in the country, Durham's about to get a whole lot better because they were pushing on more legislation and change to the development code that ultimately passed in 2024, called simplifying code for affordable development, abbreviated as SCAD. And we knew it was coming. At the same time that was happening, I was out there actually with clients, saying, like, yeah, I know investment. I can give investor lens. Here are my thoughts. Trying to help them find deals. And one in particular, we were out looking at like a dozen properties, and I'm like, yeah, this deal historically has worked. This is what it should be. This is, and he's like, okay, I'm going to put a bid in. And like, he just constantly was getting outbid because everybody and their mother was like, they learned, like, oh, I heard I'm supposed to do fix and flip in Durham, North Carolina. And it just drove prices up. At the same time, there was a bunch of inflation and deals just weren't making sense. And so I brought him to, it was actually a Mark Spain property. Um, you know, I knew what I was looking at. It was a corner lot, and I was like, it's a little tight, but I think we can fit, a subdivision here with the new rules. In Durham, you can do a very small lot here and build a duplex on it. And worst case, with the new rules, you could do it as an accessory dwelling if you really wanted it. And he was like, okay, cool. The house had been sitting. There's a realtor through Mark Spain from out of town who had no idea what the value of his land was. He knew what a 3-bedroom house in Durham, North Carolina was worth. Didn't understand that there was an extra lot there. And so completely changed the strategy. It worked really well. It was a longer timeline, but lower risk. The actual rehab on the house was something like $7,000. He could have sold off that house after the subdivision, but he put a Section 8 tenant in. He's got a brand new duplex now a year later that he just got on the market to rent. And I realized, like, okay, we were doing this. We understand it because we were doing it for ourselves first. And other people need to hear about this because I've basically made a lifetime client on finding that deal when it was actually NC RIA. I don't know if you go to NC RIA often, but like, that's where I met him. And they're all talking about all these other crazy strategies that, like, it drives a lot of demand there and it's competitive. And this is just being on the front end of knowing what you can do with land that other people just aren't looking at as much.
Yeah, no, I think that's very interesting. So, with Durham, explain to us the expanding house choices in the 2024 SCAD and what changes that cause. Because when I moved to North Carolina 9 years ago, Durham still had a pretty bad reputation as being not great city, a lot of crime, like kind of not burnt down, but not great. And then they did this huge expansion, or it was before that, but they did a huge redo of downtown by the Bulls Stadium. So talk to me about like when that expansion housing choice thing and the SCAD happened, and what changes that made to like the UDOs and to different, ability to build.
Yeah, I think we need to back up before expanding housing choices and just talk about some of those changes that you're talking about. Like, I graduated college in 2013. Even then, you really didn't want to go to downtown Durham. And I actually had the opportunity in my operations class to like hear one of the guys who opened up a brewery there, Full Steam Brewery. Is downtown. He was like, I'm taking a huge risk here. And like, I went down there, I got to see it. I was like, man, why is there a brewery here? This makes no sense. Why would people come here for beer? Obviously now it's like laughable that you would even think that nobody would go out there. But the city itself had invested a ton into revitalizing downtown and making Durham a destination, nice hotels, the Durham Performing Arts Center, and rebuilding the Bulls Stadium. And that all happened between like 20, 30 years ago when it started. And what it caused is, generally speaking, you could just look at it. It's like, okay, inflation's at 3%, housing prices are going up at 6% a year on average. And you have a decade of that, and housing just looks unaffordable at some point, and you can see it coming. Like, it's coming, like if you're running these cities. And so what are they going to do about it? You can't make, other than giving like large subsidies, you can't make construction costs go down. Construction costs kind of are what they are. But what you can do is come up with new housing types that increase housing density with the land you already have. And this was something that was just really tested out. Actually, a lot of the provisions came from Portland, where they basically, I think the city leaders of Durham were looking at places like Portland and being like, we don't want to be Portland. We can't end up like that, where people who work here can't afford a house here. And so some of those major changes were allowing for these smaller lots that previously weren't able to be used.
Can you define what a smaller lot is?
Yeah.
Because somebody in Oregon might think that that's a quarter acre, but we're talking real small.
1,000 square feet is the minimum in Durham now.
And that's not the house size. That's not the house size. That's the lot size, people.
Exactly. Yeah. And you can build a 1,200 square foot house there, which, it's small, but you can figure out how to make that work. It works very well for a lot of people. If you're a couple with one kid, you can have a bedroom for your kid. You can have an office, and you have your bedroom, a nice living room, and a kitchen, all brand new. So you have situations where you had what was previously was a 6,000 square foot lot, and it had some house that, because of Durham's reputation, like you had a slumlord basically owning it, but it's walking distance to downtown. And all of a sudden, he now knows a new developer is willing to pay him $120,000 for his house that he's getting $600 a month in rent. And he's like, okay, I guess it's time. Little does he know that, like, now you can tear that house down and build 3 houses, and they're brand new. They're low maintenance because they're new, and people are willing to pay a premium for that close to downtown. And so that's just the small lot part. There are other additional changes that happen in expanding housing choices. The expansion of flag lots. I looked for other jurisdictions where you can do these sorts of things. Like Raleigh, you can definitely do it. Raleigh's on my radar for sure. Raleigh has similar issues. They have similar solutions to what Durham is doing. But you go to Chapel Hill, and Chapel Hill explicitly is like, you should not do a flag lot unless it's absolutely necessary. Durham is like, no, we have these lots where you could put 3 houses where there was one. That helps our supply and demand exchange here. And the private sector can make money. We can increase our tax base. So we want flag lots, actually. And so just to back up how a flag lot would work, you imagine what a flag looks like. It's got a pole, and you got a flag on the top. If you laid that on the ground, you would have something that looks like where a driveway could go and where a house could be built. And that basically can wrap around another house. And that is the premise of what a flag lot would look like from a bird's eye view. And you can do things like shared driveways now, things of that nature. And what it really did was, like, if you had a long and narrow lot where you had 1,000 square foot house on the front that was built in 1928, you could now build a brand new 2,000 square foot house behind it, and it works. And a lot of people, it's interesting. A lot of people are like, well, why would somebody buy that? They don't want that. That's going to look bad. And it's like, no, if you design it right, you can give people privacy. It's not really an issue. And also, there's massive precedent for this. If you go to places where there already previously was a population expansion. So if you go to California, like my parents' house outside of LA, they have 3 houses coming off the same driveway. Nobody's questioning that in California. So it can work here too, especially as the population grows, and it increases the tax base to do things like build more downtown from the city and keeping positive momentum going. And so that's something that Durham's been pushing with the flag lots. And then there are some other changes that eventually happen with SCAD ultimately years later, because there was so much success where they were looking at new build houses, new build 3-bedroom houses, and like, yeah, Durham's the only, major metro, compared to Charlotte and Raleigh, where you can buy a 3-bedroom house for under $400,000 if you look on the market right now for a new build. That was a few years ago before SCAD, and it's like, well, why is that? And it's like, okay, because they've got these new housing types, they've got new land use, and so it was actually a private text amendment that got approved by City Council to fix up some of the I'm not going to say mistakes, but minor things like the way stormwater was treated on small lots, like fix that up, and then allow for even more like high density situations. So like you can build 10 townhouses without a site plan now in Durham. That's like unheard of, but that's that's something that they were like, yeah, for smaller scale development, that's very good. And it allows more development with use of the existing infrastructure. For people like us who do what's called residential infill development, where we're filling in an existing neighborhood, you already have a street, you already have utilities. Someone should be developing this land and should be developing it with maximum density. And so in 2024, um, it allowed developers like us to be more creative on what they're building. Accessory dwellings can now be duplexes. That should have been from day one. You always should have been able to, if it was just kind of weird. You could have a duplex and then build a single unit accessory dwelling, but you couldn't do it the other way around. And so everybody kind of went in and was like, well, that doesn't make sense. Let's fix that. And so you have changes like that. They increased the size of what an accessory dwelling could be. So that went from 800 square feet to 1,200 square feet. Why did we do that? It's like, okay, well, it turns out because you had these small lot designs that were maxed out at 1,200 square feet, everybody already has a bunch of 1,200 square foot designs that they can copy and paste and just drop in somebody's backyard. And now you have an extra housing unit. And so changes like that, they're just smart. They make sense to people who, want change to happen.
Yeah.
And
that's the question, right? Is do you want the change? And it's obvious that Durham, the city of Durham, wants the change to happen, right? I don't remember the name of the plan, but they have a plan that basically they want X number of houses within a certain size of the city center to be walkable or something.
Yeah.
Right. And so that's where this is all coming from, that if you want to have a more rural home, you can do that. You're just going to go farther away from city center. You're not going to, they would rather not have somebody have a half acre or 3/4 of an acre within a quarter mile of city center, right? They'd rather have more homes.
Yeah. And presumably July of next year, we'll see, it's the government, but they're going to make those changes. It's the comprehensive plan to make this actually happen, where basically you don't have suburbs anymore. You're either downtown or you're rural. And that's it. So if you're close to downtown where high density should be, like, we're going to do that in that area. And if you're in the rural, we're going to protect the forest. But don't complain if you're in the suburbs. And now, generally speaking, the suburbs are going to become more urban, but we need that density. We want that density. That density should be there. We have the streets, we have the utilities. And what this does is it creates a situation where we actually can preserve more of nature and our parks and our green space, because we don't need to tear down as much land to build as many houses. And so if you're worried about the environment, it's also, there's a benefit there too, where you don't need to disturb as much land.
Yeah.
You'd be surprised like what size people actually need to live in. And so you look at other countries, talk about New York City, where it's like, yeah, 1-bedroom apartment, 500 square feet. People are happy as long as they also don't need a car. They can walk to a bunch of restaurants. Like, you need these other solutions. They're building a big greenway that goes all the way across downtown, so you can take your bike very easily without having to worry about cars. Like, all of a sudden now it's like, okay, well, I only need one car instead of two cars for my family, because we just don't need that. And we walk and we're happier and less stressed. So that's part of the vision of the people who are changing that right now. And some other more specific changes to make Durham actually more European in a lot of ways, where you have mixed use, everything's walkable. You have little town centers outside of the downtown where you have your little neighborhood that you have a little grocery store, you have a restaurant, you have your coffee shop, you have your bookstore, and you can walk there. And by the way, they're not going to require a site plan as long as you're developing that commercial site on under half an acre. So like, those sorts of changes are good, because the guy who wants to build a little coffee shop where he needs a little 1,000 square foot building, paying a $50,000 to $100,000 to make a site plan for that, you're just never going to have that small business owner be able to do that. And you've seen that in many cities in Durham, or many cities in America. In Durham, I mean, the actual permits pulled on that scale for small businesses, of those sort of box shaped 2-story designed commercial buildings where maybe it's mixed use office with retail on the bottom, there were 0 permits pulled on that since 1970, pre-SCAD. And so they were trying to change that and allow people to, help their small businesses grow and develop real community that's walkable.
Do you think it's realistic that that's actually what's going to happen? That you're going to have these like single kind of double stacked ones, or is somebody going to come in and say, "I'm going to buy half this block," and it's going to be this mixed use thing where you have apartments up top and city or shops down below, and you get that same type of community with your small house, small footprint houses around it?
So the way they've written the code is that's not possible. Basically, if you take a big lot and you just subdivide it continuously until you have under half an acre, they're they're not going to allow you to use all these exemptions to build that. They're going to say, no, you still need this site plan and it's more expensive. And, this is not what's intended for this space. Meanwhile, we actually ran into roadblocks. We were under contract. We actually had to terminate the deal where we were in downtown and we were trying to do something with townhouses that it ended up being too difficult to actually do. They're like, actually, we want you to build the monstrosity that's 6 stories in this area. So you can't do what you normally do with your residential infill here. You're just not allowed, basically. It would be cost prohibitive to build that. And so they've designed it so that if you want to do the sort of project you're describing, you can do that, but you have to be like design district downtown zoning in order to do it.
Yeah, I mean, so there's and most people outside of Raleigh won't know this, right? But there's a area called Fenton where they basically took a big field and they built massive commercial buildings, and they have, like, just like you're talking about, a downtown with all these little shops and then apartments and stuff up top. And there's several people in the circles that I run in when commercial real estate think that there are high income zip codes in the Raleigh area. They're going to move more and more towards that so that people don't have to go to downtown Raleigh to do their shopping and living, and they can live closer. But I think the differentiator there is that that's high income type areas versus like Durham, which is trying to get more people living comfortably in their 350 to 400,000 square foot 3.2s, right?
Yeah. Yeah, I mean, they still actually do have that product if you want to be in the design district where you're in a 25-story tower, like, you can do that. You can go buy 1,000 square foot condo for $1 million if you want that. And like Durham wants some of that, but like you see people get shot down. I'm blanking on the developer's name, but they were trying to build basically a retirement community where they're going to tear down a bunch of like Jordan Lake watershed area and build a bunch of single story 3-bedroom houses that started at $700,000. Like the city was like, no, like that's not what we want. That's not in the comprehensive plan. Like, and the neighbors on the neighborhood next door were like, that's not allowed. That shouldn't be allowed. And it got shot down. It was just like, I'm wondering how much this was a major house builder. I was like, how much did they spend trying to get this pushed through city council when like it's just not going to happen in a place like Durham? Like, it's like you're supposed to, what is his name? Jet Li or Bruce Lee, be like water. You got to be like water. Like Durham's telling you what they want. Like there's
Right.
ways to make money if you just do it the way they want. And like,
Yeah. I think this is a good place to kind of transition a little bit because most people don't understand the development process, right? They think that if you want to build something, you just buy it, you ask for a permit, and then you just go and build it. And so, you see, oh, they're turning that field into a subdivision. The ground just turned. You think that they just bought it like a year ago. And really, this been 3-4 years in process. You've been paying attention. Talk to me a little bit about that development process for what you guys are doing, what that looks like, who you have to talk to, how long it takes, the cost and process involved.
Yeah, I think we should back up to like traditional development that like you're talking about, where like you're building a 100-house neighborhood, and it looks like it's like they just closed and they're immediately building. But what people don't see is that land may have been under contract for like a year or two, and they have a bunch of civil engineers and a bunch of architects and all sorts of people, lawyers, lots of lawyers, racking up lawyer fees, which
so many lawyers.
And believe it or not, that cost just gets passed on to the end housing price, where they're spending a bunch of money. And the seller, actually, it's interesting, they don't actually take any, like, there's earnest money, but there's no, like, and North Carolina is one of the few states that does this, like, true due diligence money that's non-refundable. That's a very unique North Carolina thing. But generally speaking, earnest money is all there is. They might post up a fraction of what they're actually going to pay because like the seller knows, like, these guys are about to spend hundreds of thousands of dollars and try to get this land for, a year or two that may get shot down by city council anyway. And so they're in it if they're going to be doing it. And they're spending all that money on the front end to get approved to maybe rezone, do plan development, things like that, that might get shot down, and takes years and lots of money. And like I mentioned, passes on a cost to the end home buyer. And so what Durham did is create what they call exempt platting. And what it is exempt from is site planning. And so if you hit these rules and you're doing a smaller scale development, you can go to the city and say, hey, I've got 10,000 square feet on my lot. I'm fitting all the other rules here. By right, I'm allowed to make this 2 5,000 square foot lots. Please review this just from my surveyor and give me my other lot. And that process takes like 1 month. And as long as you are following all the rules, and there are rules, lots of rules, but you can look, they're publicly available. You can just search it, Durham UDO, and read all the rules. As long as you're creating those lots that fit and conform, there is no city council to shoot you down. It will just become a lot. It will get, the planning department will accept it, and you have your lot. From there again, still are rules you have to conform to. If you're in a zoning where it says you can't go over 35 feet, you have to build a house that's under 35 feet. And you have to apply and say what you're going to do, and hire an architect and hire a structural engineer to show how that house isn't going to just fall over when it gets built, and get those plans approved. And something simple like that, where you're just dividing the lot, takes about a month, and going and getting your other permits takes another, call it 2 to 3 months, depending on what questions they're getting. I mean, you can go from I see a situation where I can buy a house and subdivide a lot off, to I have permits in hand in 4 months to build my new structure, which is unheard of across the country in terms of creating a subdivision. Technically, in the entire state of North Carolina, exempt platting does exist, but it's the dumbest rule ever. It says that you are allowed to exempt plat as long as your smallest lot that you are creating is no less than 10 acres. So you can take, yeah, you can take 20 acres and make it 2 10-acre lots without city council approval.
Perfect.
Which, exactly. And Durham just said, you know what, let's make that a little bit smaller. And it helps small businesses. It's not like Lennar is out here, or DR Horton is utilizing these provisions to make a bunch of money. It's helping guys like us who are local and, use local subs. Like DR Horton, they might be like pulling in a sub from Virginia or Maryland to come and build their houses. Like, we don't do that. All our guys are local. We're feeding it right back into the system.
Yeah, I mean, they're not going to work on the infill lots because there's just not the economy of scale. I mean, they need to come in and pick up 100 acres so that they can pump out, 190 houses in the course of 3 years. And so individually picking up 3-4 lots and splitting it into 5-12 lots and building is not their model.
Yeah, exactly. And I think that's where like a lot of the pushback and the misunderstanding comes from, maybe it's a derogatory term, but NIMBYs who don't want anything built in their backyards. Like, they hear like, oh, developers want this. And it's like, well, there's a difference between a local developer and DR Horton. And you should understand that. And like, we're not like them. And like, I live here. I don't want to build a crappy house. I am worried about my reputation personally. You can, you can come to my office. Like, it's in Durham. Like, it's in downtown. Like, where I work. Like, good luck finding somebody in DR Horton in their headquarters, wherever that is. Like, or their capital guy in New York City who's doing whatever. We're here, we care about it, and we're not creating these ticky-tacky, all the houses look alike, houses. We have other interests outside of just making money. We want to do cool projects. We want to do good things for the community.
Yeah, I agree. And I think some of the stuff that you have been doing, at least that I've seen, is pretty cool. Can you give us an example of a project that you've done recently, or you're exiting soon or something, and like what it looked like when you bought it, what you bought it for, what you end up doing to it from a subdivision standpoint, and what you built on it, and some of the numbers that you had from it?
Yeah, so we're wrapping up a couple of duplexes that we built in East Durham. It's on Cherry Grove Street. We actually bought this house in 2020. We paid $210 for it. The rehab was about $100,000, and when it was done, it appraised for like $430. We put some tenants in there. It was a 5-bedroom house. I didn't really know too much about subdivision at the time, anything like that. What we did notice is like, oh, this is actually a really big lot. And with expanding housing choices, we're like, okay, we could flag lot this actually one day when it becomes time. And then, our debt was basically 3-year prepay, 5-year term. Okay, we're looking at it. And we're like, okay, what do we do with this house when these tenants leave? Basically, we could put a little bit more money into it, sell it off. It was a 100-year-old house. It's pretty unique, but for us, our purposes, it's like it's sort of run its course. We did okay. We paid down some debt. Somebody else would like this house more than we would, so they're willing to pay a premium to what it's worth to us. But before we sell it, especially now that like SCAD has passed, it turns out we can do a shared driveway where we get 2 flag lots instead of 1. And we're like, okay, this is very attractive now. And so what we were able to do before we sold the house is create 2 flag lots behind it. We put a nice privacy fence behind the 100-year-old house, and we sold that off ultimately for $450,000, I believe is the number. And at the same time, we spent maybe $15,000 developing those 2 lots to get our permits in hand, subdivide and everything. And we got 2 lots that were each worth $70,000. Land being worth $70,000, that's nice if we just sold it off. But like, I saw an opportunity for our company to be like, okay, this is something when we build something new, it's got a 30-year life before like you have really, really any sort of major problems. Like, I intend on still holding real estate 30 years from now. Let's build new. Let's convert that 70,000 to a little bit more in equity that's cash flowing. And so how best to do that is to build duplexes. We were able to get a loan that fully financed our construction at $335 a duplex, and those duplexes appraised for $460 on the back end, and we'll probably get $1,600 a month in rent on any of those units. We'll go into a DSCR loan, probably mid 6s with 10-year interest only, and figure it out 10 years later on what we're going to actually do, maybe 5 years. But in the meantime, we'll be cash flowing, and we're going to have great looking houses. They'll be finishing up next month. We broke ground on those in May. And yeah, that's our build to rent situation on that worked out really well for us in a neighborhood like East Durham, where I see a lot of upside given where housing values are today and its proximity to downtown and where they're going to be, call it 10 years from now.
Do you have any idea what your annualized cash on cash return you expect to be on that property?
It's pretty low. It's probably like 5-6%, but that's based on the new equity amount also. So I look at it as my return on equity.
Right.
Like that's something like I'm looking at right now, like the building I'm in right now. I know, I had really good return on equity cash wise when I first bought the building and did improvements. Now that my equity's doubled, my current return on equity has halved. So it's not as lucrative to me to retain this building anymore. And so that's how I like to look at it. What's my return on today's equity when I'm talking about a cash on cash return?
Yeah, that makes sense. I mean, I just know that, when we're looking at investments, like what are we going to put our money into that's going to give us the best return over the long period of time? And obviously with rentals, you're getting some additional benefit through not only appreciation, but also tax benefits of depreciation. So there's multiple ways to look at it. Always interesting to hear, especially on some of these things where you started off 5 years ago and basically had next to zero basis at one point, where you're currently at or where you project you'll be.
Yeah, it was just I'm optimistic that rents will go up and that rates will come down at some point over the next 10 years. And that it's a winner in the long run and winners tend to win. And so it's just, if I were in a situation like there's another neighborhood, Northgate Park, where we did something similar and it's like, okay, the return on equity is even lower if we did a rental product here. Like people are willing to pay $350 a square foot in this neighborhood. Like we're building at 200 a square foot. Like, we did the rehab, we built the new house and we sold it off, because that's what made sense there, and put that capital in neighborhoods where, it makes more sense to build duplexes and go for this cash flow.
Yeah, that makes sense. So one question I have for you, and we talked about it just in passing before, is talk to me about ADUs. So ADUs were a huge, like all in the rage, like 3-4 years ago. Everybody was building ADUs on everything. And then at least from my perspective, it seems like there's been a big tapering off. And even like I was underwriting some properties that potentially were going to have ADUs built on them in Durham 4 weeks ago, and just really struggled to find comps that had ADUs in there. So tell me like what your thoughts are on ADUs, how they add to the value of the property, and how you look at them when you're deciding whether or not I should even build an ADU.
Yeah, so there's just a lot of challenges with ADUs. We never actually were big on them. It's kind of an opportunistic thing if you have them. I am going to caveat and say like I have one project. I'm about to build some ADUs, but we can come back to that. Like for a homeowner who already owns the land, it's not subdividable. You can get a HELOC or something like that where you can buy it like, okay, sure, and you want some extra cash in your hand. You can make those numbers work. Now, as your primary objective to do an ADU where you need an appraisal, whatever you need, like not even just you having an appraisal, whoever you sell the house off to on the back end, guess what? Unless they're buying with cash, they need an appraisal. And the appraisal then drives their financing. And if you don't have comps, like it's just really, really difficult. And that's where the challenge comes in. But when the small lots first came out, they look a little different. They're on these small little bits of land, but generally speaking, an appraiser can be like, okay, I know what a 1,200 square foot house sells for. I don't think the appraisers are able to be like, okay, I have a house and then somebody built another house behind it, but it's on the same lot. Like technically that's a duplex, but it's not a duplex. Like there's so many varying opinions on what that ADU is worth where they just never really made sense. And it's like, even now it's like, okay, I can build you a duplex ADU and it'll cost you 280,000 or well, I guess duplex ADU, call it 260,000. I'll build it for you. Or we figure out how to subdivide it and I build you one with its own utilities for 280 and maybe like 10K of development costs. And you spent $30,000 more, but it's a separate lot, a separate duplex that can get appraised on its own. It just like is infinitely more financeable. And that just means it's more liquid too. And they're just not very helpful. And I actually go to, I try to talk to people who know more than I do. And I go to some other networking events where like I'm a small fish in the room. I love being there. Like, and one of the things that the moderator of that meeting was saying is like, what's the most liquid form of housing, of real estate? And the answer is a single family home. And when you build that ADU, you no longer have a single family home. You have made your house less liquid. And sure, maybe a few years ago when the market was really hot, you could sell whatever, but that's not the market today. So you're decreasing your demand. Like it's not financeable. And those are a lot of the challenges. Now, hopping back to the caveat I made, I am going to build ADUs, but I'm doing them. I'm doing duplex ADUs with something called an attached house. That's what Durham calls it. It's a duet for other jurisdictions. They're separate lots. Each half of a duet is going to have a duplex ADU. And I've got 4 of them that I'm building where one house used to be. And so I'm getting 12 units.
So let me walk. So basically, you got a building that has a shared wall, and the property line runs through the building, through that shared wall, and then unattached, but in the back, there is an ADU on each of those. So you have one building in the front that's 2 parcels, and then 2 buildings in the back that are on the same parcel as half of the building in the front.
Yeah, and I'm getting 3 units per lot, where one house used to be.
Yeah,
near NC Central. And so at that point, I've got 12 units. I'm going to the lender and I'm like, hey, you're not using a residential appraisal here. You're using a commercial appraisal. So I'm getting maximum density. I'm getting through permitting relatively quickly. When we came up with this plan, I sat on this land for years, but we came up with this plan late June, early July. And we should have the permits early next month. And so it was a little bit more complicated. It was new for us, but still 6 months, and I don't need city council approval. I'm going to get those permits. Yeah, that situation, that's financeable. That's a commercial project there. And in that sense, the ADUs are working because I'm basically building a small scale apartment complex that it's on paper, like, yeah, it's going to be 4 separate lots. But when you drive by the street, what it's going to look like to you is 6 duplexes.
So how have of all these changes that Durham's made, how have the appraisers kind of kept up with it? And have you seen like a lag in appraisal values as these things shift and change and lot sizes get smaller? And now I'm not sure if I'm comparing this home to this one or not. And I've got a flag lot, and how does a 3-2 at the back compare to one that's got more road frontage?
Yeah. So I haven't actually seen an appraiser discount for a flag lot. There's some other things they don't really understand with the 1,200 square foot houses. And you just like, you need an appraiser who understands Durham, not just for that, but for the like, hey man, that comp that's a half a mile away is actually a worse comp than this other comp that's 3/4 of a mile away because of the like how comparable the neighborhoods are and things of that nature where you can run into some appraisal trouble. That being said, the major shift I've seen is with lenders. Lenders used to love fix and flip. Like I said, I was getting 95% LTC on those loans. And now they've realized, wait a second, it's lower risk, for the same, if not higher reward on new build. That's what they're realizing. And they're finding ways to find products for that. Because quite frankly, like, yeah, when you have a rehab and it was somebody else's plan and they're tearing down a wall and they don't know what's behind the wall, like they get hit by a bus, what are you left with as a lender? Versus these, like, hey, it's new build, like anybody can build it, anybody can. And like, even there are a lot of lenders out there. We're doing what's a guarantee of completion, which is basically like an assignment contract with the lenders for newer clients that don't have experience. And it's like, basically it gives the lender rights to go directly to us as the general contractor. And if the borrower messes up, we're just going to finish out as the general contractor. And they're happy with that risk. And even if we didn't finish it out, they could find another general contractor to finish up the project. And so that's not necessarily something like you can get with a rehab, because it's just lower risk. Even from my general contractor perspective, it is lower risk. It's lower risk for everybody in the food chain, basically. So lenders have found ways, if they know Durham, they're like, yeah, we know you can get 2 lots here. And they're finding ways to give us credit for those 2 lots where previously 5 years ago, they're like, I've never seen this before. What are you telling me you can put 2 lots here? I'll give you an appraisal based on one house with that backyard. And I'm like, no, I want this house plus just know I can spend $15,000 and have permits in hand to build 2 duplexes. And like, that's, that's the change on the lender side that we're seeing. And part of that is like, they're finding appraisers who will give that, like, hey, I get it. This is what this house is worth after that subdivision. And this is what those lots are worth. So like, this is what the ARV is when that work is done.
Yeah.
You just got to find the right people who understand it.
You got to find the right lender too, right? Because your local bank is probably going to be a bit more conservative than someone that specializes in the type of new construction loans that you're talking about, right? Did I lose you?
Yeah, although the bigger community banks get it. And they're like, okay, you have experience, you've done this before. We trust you. We have a relationship from other deals with you. I mean, that's how I initially got into new build. It's kind of interesting. If you go to hard money guys and you're like, hey, I want to do new build, they're like, show us your 2 last new builds you did. And it's like, well, I don't have a new build. I'm ready for it. I've done 15 fix and flips. Like, I'm ready for it. And my community bank, meanwhile, was like, yeah, he did 15 of these. Like, I still had my W-2 job, so that helped too at the time. And they're like, yeah, go do a new build. And so, okay, I got 4 new builds done where we previously was one purchase for like $80,000 for land. We built 2 duplexes and 2 single families. And at that point, because of the community bank just trusting that the deal made sense, the market was hotter and they were more aggressive. But even still, they're at like 75% LTV, things like that, or LTC, a little bit lower than a hard money guy would do. But like, in that market, it all still worked because I created 300,000 of land value from what was 80,000 by spending 15,000. And so they gave me the loan to do it. I got it done, and now I can go to hard money. But like I said, you just got to get creative on how you get into that first one done. Like, that's guarantee of completion. That's how we're doing it with people. They're like, I got 0 experience. I'm also getting torched doing fix and flip right now. And I was like, I know 3 lenders who will take a guarantee of completion from my company to get you a deal. If you work with us. That's how we figured it out for now. I was in the right place at the right time, I guess, for how I got to it with a community bank. That was Town Bank. Town Bank gets it. They're here. They're local. There's no way Wells Fargo was doing it. I can tell you that.
Yeah. When you think of banking, you don't think of cutting edge, right? You think of more conservative. But yeah, you're 100% right. It just depends on who you want to talk to and who gets it and who doesn't get it. And you want to partner up with the people that do get it. So last little bit here, I want to shift topics a little bit and we've talked about where Durham came from, kind of where they're at now. Give me just a brief overview of what you see in the market in Durham and Raleigh over the next 12 to 18 months, as far as you want to project ahead.
Yeah, I mean, maybe this is a little conservative. I think we're pretty flat over the next 12 to 18 months. I don't think we're down. I don't think we're up. Just that's the high level on values. I think it's kind of crazy. I actually use I get all these zip codes, and Zillow tells me their projection over the next 12 months. And I'm looking at all of them all the time, and they email me. And they're surprisingly accurate and receptive to things. And they're just generally anywhere between 0 to like 1.5% up right now, which is unfortunately under inflation. But for a while, they're like showing like 10% up. And I'm like, that can't be. And like it ended up happening. And so, I think the market's going to be generally flat. I think rates are going to come down at a trickle. At the same time, people are still moving here, and there's a supply demand mismatch, and there's a ton of opportunity out there to develop this land. I think a lot of people are scarred, a little bit burnt because of what happened with the interest rates spiking. But there are deals that now work at 6.5 if you just price it right. Quite frankly, a lot of costs have actually sort of come down a little bit. There are a lot of pluses and minuses, but we're not seeing 8% inflation on construction costs right now. So that's one de-risk factor there. You just got to know the right neighborhoods. Like right now, I'm not going to take a risk on a new build for sale in East Durham. I'll take that risk on a rental there, but if you're here, you can see things like there are so many 1,200 square foot houses that got built. And the city knows it too. They're sitting there and they're not being sold. And meanwhile, that same 1,200 square foot house in Duke Park, which is a mile and a half away, is under contract for $600,000. So as a developer, you got to know these things. I know Durham like the back of my hand for that sort of stuff. Raleigh, not so much, but there are similar situations there as you get to like near North Hills, and at the end of the day, there's an unfortunate reality that in Durham and Raleigh, it is less risky to build a $2 million house right now than a $500,000 house. And if you have the capability to write that check, I would suggest, getting over $1 million plus, $1.5 million plus, even on your first project, it's actually less risky, even though it feels counterintuitive because it's a larger number. It is less risky than building a middle-class house right now. Rich people have money and are less interest rate sensitive, unfortunately. So, but yeah, over the next 12 to 18 months, I hate to say more of the same, but we took a hit. Real estate went down like 10, 15%, but now we're just slowly creeping up. Rates are slowly creeping down. Just build a good product that people want. Don't do something stupid like build 8x8 bedrooms that you can't fit a queen size bed in. Follow your rules. Don't make exceptions.
Right.
Don't be a cheap slumlord where you don't have a dishwasher on a new build. That makes no sense. Put a dishwasher in so that you can attract a tenant that wants a dishwasher, a tenant who's willing to accept the lack of dishwasher.
Yeah, it never pays to be a slumlord. The quality of tenant itself and the amount of turns you have just destroy your profitability.
Yeah, that's a Rocky Mount strategy.
As I'm not in Rocky Mount anymore, I may have some scars from that learning as well. So, all right, Devin. So I always ask everybody this question before I end the podcast. Based on what you know now, what information would you go back and give yourself when you're 18? Or what information would you take to your children when they turn 18 based on your current knowledge level?
Yeah, so it's about risk tolerance and the way our brains have developed and the way we feel stress and anxiety. And this applies to everything. It's not just real estate. It's not just business, but our bodies react the same ways that when we were hunters and gatherers. And we have the downside if you make a mistake when you're out in the safari hunting for dinner is a lion eats you. And that just isn't the same case in the United States anymore. If you take a risk, generally speaking, you get a second chance. You can do stupid stuff like drive 120 miles per hour on the highway. Obviously don't do that. But generally speaking, there isn't a lion that is going to eat you. And so for myself, I get nervous, I get anxious, whatever. And I just remind myself, no lions. It's something I tell my wife too, when she's stressed or anxious, no lions, everything's going to be fine. My advice is no lions.
All right, Devin. So if anybody wants to reach out, talk to you, or find out more about Better, what's the best way for them to get a hold of you?
Yeah, you can have my personal cell phone number, 9-357-6883. You can also email me, DSOLOW@betterpropertiesllc.com. Go to our website. You can see our team members, get their emails, LinkedIn, like that. Just reach out to me. I'll respond.
Awesome. I'll make sure all that's in the show notes so that anybody that wants to reach out, learn more about Durham investing, have a project that they need a contractor for, want to learn how to create flag lots, they can reach out to you and learn from the masters because you guys really seem to have it locked down over there. So appreciate your time today. The insights and the information you gave us were super valuable, and I hope the audience got a lot out of it. And really appreciate you taking the time.
Yeah, thanks for having me. It's been great.
Awesome. All right. Thanks again, Brick by Brick Nation. We will talk soon. Thanks for tuning in to Brick by Brick Wealth Building Conversations. If you enjoyed today's episode, don't forget to subscribe and leave a review. It helps more people find the show. For more tips, resources, and updates on my journey, follow me on Invest with Loren. Let's keep building wealth, one brick at a time. See you next week.